Good evening, everybody. This is Charlotte Duplessis from Women of Stature, and welcome to our webinar series. And it's Thursday, it's the 3rd of September. Can you believe it? Can you believe it? We're already in September. It's like the other day that we heard about the pandemic and we heard about the lockdown, and look where we are today. And my goodness, we've survived it. So good evening. Hello, Gail. Lovely to have you with us. And I saw Marissa was online with us as well. So I really want to say thank you so much for joining us. You know, the webinar series was started out of necessity, as you know, but it's now becoming quite a necessity for us to stay connected. And Ilona, lovely to have you with us as well. Thanks for joining in. And you know, Ronel is, as we have gotten to know her, she's a financial expert. She's someone that is obviously keeping a fine eye on what's going on in the economy of South Africa, how it's impacting those who are business owners. And then, of course, just as anybody would want to do, is to make sure that they are financially fit. And that is exactly what Ronel makes sure about, is that she keeps financially fit, and in so doing, she keeps you financially fit. So it gives me great pleasure to again introduce, because you know, this is I think it's the 4th one we're doing, Ronel, if I'm not mistaken. Yeah. It's been an absolute pleasure having you online with us. You know, you have got such wisdom, and you know, in the financial market that you are in, you know what works, what doesn't work. So I hang on every word that you speak. So over to you, Ronel, and enjoy the evening, ladies. And this is being recorded, so just so that you know, if there's anything that you didn't quite catch or quite understand, we will be sharing the recording with those of you who have registered. And of course, you know, Ronel is available to answer any of your questions during the course of the evening. You can just drop us in the chat box, you can drop a question, and Ronel will obviously make a point of answering as she goes along. Thank you so much. Sit back, relax, and Ronel, over to you.
Thanks a lot, Charlotte, and thanks a lot, everybody, for joining us, and welcome. I know it's been freezing this week, so I hope you all have your blankets ready and a hot cup of coffee so that we can talk a bit about finances, something that I'm obviously very passionate about. And this evening, I'm going to specifically talk about a topic that's very close to me as well. And that is something that I see with a lot of people, where they almost go wrong and then end up in financial trouble. So I want to discuss it with you, and yes, I hope you enjoy this session with us. So like Charlotte said, if you have any questions throughout, please pop it in the chat box, and then we will make time to respond to the questions afterwards. So yes, I hope you enjoy this session with us. So tonight we will be talking about how to free yourself from the rat race by increasing your wealth. Now, if I can just share these two pictures with you, and then I like to start the sessions off with a bit of a reflection, usually, where you can just think about where are you currently with your situation in your life. Are you basically picture number 1, where you are feeling you are running on this wheel and it is a bit of chaos and you are constantly busy and it seems that you are not making a lot of progress and it's just there's so many things happening? Or do you feel you are more towards picture number 2, where you have financial freedom, you have time freedom, and you are no longer that much faced about having to work for all your money and having to work 24/7, and you almost constantly busy trying to make a living. So just share with me, where are you in your situation currently? Number one or number two? Please share with us in the chat box. I see number ones coming through, number ones. So yes, just everybody, most people responding say number one. I think that is a very true reflection of most of us all currently, and I think especially with the current situation that we are in. But I see here Ilse is making a valid comment here. She says one, but dreaming of number two. And I think that is what tonight is all about. We are sometimes in a certain situation, but we want to get to that other ideal situation. And yes, that is actually possible to get there if we do take action, and we basically get to a position where we really live the life that we dream about. So if I continue, just for those of you who don't know me, I just want to give you a little bit more background. I'm a chartered accountant by profession. I've spent 14 years at the large listed corporates. So I've been working with all four of the big banks, the big insurance companies, investment companies, asset managers. So I do have a lot of experience within the financial services sector, and I do know how the banking and insurance and investment products work. And I think that is where my passion lies, is to really educate people about finances. So I've then started my own company called Financially Fit Life in 2015, and we are doing financial consulting and training for both businesses as well as individuals. And then I'm also quite excited, during this lockdown period, we've also formally launched our accounting and tax services, where we also focus specifically on the startups and the small businesses that cannot yet afford such expensive accounting and tax services, because I've identified that to be a need during this period where many of the smaller businesses or startups couldn't have access to funding and relief schemes because they didn't have those services in place. So you're welcome to go have a look on my website to see what we are offering. Then I'm also the author of Financially Fit and Wealthy, a book about personal finances, and the co-owner, together with my sister, of Physique Fit Guesthouse in Centurion. So let's get into what we will be talking about this evening. First of all, it's about unlocking the secret that determines your financial wealth. Then we will be looking at find out how wealthy you are already and how you can double that, and also unlock the 4 simple and tap principles that puts you on the road to become financially free from the rat race. So that's exactly what we were talking about. How do we move basically from being in picture number 1, moving to picture number 2, the ideal picture where we would love to be. So let's start off with unlocking the secret that determines your financial wealth. Now, I think with financial wealth, it's all about what do we think financial wealth means, or what do we perceive financial wealth to be. Now, typically we would usually think of being wealthy or being rich, that it's all about, you know, living in a good neighborhood, in a nice home, and driving an expensive car and going on all these exotic holidays. And then it's also about how you dress in terms of the brand. It's important to wear a certain brand of clothing or a certain brand of watch or jewelry or shoes or whatever. And then it's also about the apps, I know, and the gadgets. This is usually what I find with some of my male clients. You know, for them, it's quite often very important, you know, that they have the latest and the best brands and the most expensive things. And whenever a new gadget is launched, they are first to have that gadget. And then it's also about, you know, the lifestyle that you are living, this lavish lifestyle. And I think sometimes we have this perception that people who are having these, or who are perceived to have these, that those people are financially wealthy or they are rich. And I know even for myself, when I was growing up, we were living in more a middle class type of neighborhood. That is definitely what my perception of wealth was. I've seen these people, you know, driving with the expensive cars and living in the fancy houses, and you immediately thought of them being rich and wealthy. But then as I moved along in my career and I started to get to understand a lot more about financial wealth, and also start dealing more with people and helping individuals specifically with their finances, I got to reflect and got to understand what financial wealth really means. So I want to share these statements with you, and then I want you to think a little bit about it, or let it sink in. What am I saying when I make these statements? It is not about how much you have, but how much you own. It's not about how much you have, but how much you own. It is not about how much you earn, but how much you keep. It is not about how much you spend, but how much you keep. It is not about the lifestyle you live, but the lifestyle you can afford. Now, these are quite profound statements if you really think deeply about what these statements mean. And it's not about how much you pretend, it's about how much you really own. And this all comes back to, I think with finances, there's a lot of pretension. It's easy to pretend that it's going well. It's easy to make sure that you have a nice house and drive a nice car and you dress well and everything kind of like on the outside. But then you need to reflect in terms of what's really happening on the inside. Are you in financial trouble? Do you stress about your finances? Do you have a lot of debt to be able to afford the lifestyle that you are living? And also about, it's not about how much you earn, but how much you keep. There I always use that example of when a boss is earning 100,000 Rand a month, but he is spending 98,000 a month to repay all the debt on for his boat and his nice upmarket home and his fancy cars and all of that, and he's only having 2,000 left at the end of the month, compared to his secretary who earns 20,000 a month, but she's only spending 10,000 a month, and she has 10,000 left at the end of the month. Immediately, just by perception, we will immediately think it would be the boss that is the wealthier of the two, because he's got all these possessions. But if you really think about it, the secretary is actually more wealthier than the boss because she has more money. She owns more than what he does. So very interesting if you think about it in this way. And then also, and this brings us to our second picture that we have looked at, wealth is to not have financial stress, but to have peace of mind. Wealth is about having financial freedom and time freedom. So it is basically to be in a position where you are no longer in that rat race, where you are just trying to survive from month in to month in, but where you are in a position that you have excess money, that you have investments, that you have a good nest egg built up, that you have sufficient retirement savings, and that you are not constantly stressed about money, that you can afford things and afford to buy things on a cash basis, and that you don't need to rely on debt to be able to maintain your lifestyle. So your wealth is determined by your net worth. Now, this is a term that is quite often used, and sometimes people perceive it to be a bit of a complicated term, or they do not really know exactly what it means. But your net worth is actually crucial for you as an individual, because your net worth will determine your wealth. So who of you know more or less how much your net worth is? If I have to, you don't need to share it, just let me know in the chat box. More or less, who of you will be able to tell me, if I have to ask you this evening, how much is your net worth? Vanessa says, nope, I have no idea. Anybody? Zona says, yes, I do know. That's awesome, Zona. Anybody else wants to share? So some people says yes, some people say I can only guess, but not sure, not 100% sure. So yes, this is quite often a question that a lot of people are not really clear about, or they don't really know how to calculate it or how to determine it, and they are also not really ever thinking about it or trying to measure it and see how they can grow it. So let us move into finding out how wealthy you are. So I want you to make some notes if you have a pen and paper close by, so that you can try to do a quick calculation as we go through some of the examples, so that you can have a better idea. So let us look at how we first of all calculate net worth. So this is pretty much if you used to have accounting at school, when you were, I don't know how many of you were in grades or standards. I was still in standard, so that was pretty much when you were in standard 6. One of the first financial principles that we would have been taught about, and that is all about accounting, but this is exactly the same calculation or principle that you also use to calculate your net worth as an individual. So you are taking your assets, so basically everything that you are owning, and then you are deducting your liabilities. So basically everything that you are owing. So we will go into some examples of what is included as an asset and what is included as a liability now. And then your assets less your liabilities will provide you with your net worth, or your value, or if you think of your business, then it would give you your equity figure in your business. So it's assets less liabilities would give you your net worth. Now you can either be in a positive net worth position, so that would be when your assets exceed your liabilities, or you could be in a negative net worth position where your liabilities exceed your assets. Now, obviously, you want to be, first of all, in a positive net worth position, and your goal should be to, over time, build and grow your net worth. And if you are in a negative net worth position, you want to work towards getting to a positive net worth position. Now, this is where I've mentioned to you in the first slide or so that quite often I see people who seem to do fairly well. They're earning good money, they're living a good lifestyle, but they are struggling financially. And especially when something happens, like for example now with lockdown, or if they maybe get retrenched or something like that, and it's affecting their income, then they are much worse off because they are in a negative net worth position. And that is all basically people who have a lot of debt, who are basically over indebted, and their liabilities and debt completely exceed their assets. And that is a very I don't know if the word bad is the real word, but this is not a good position you want to be in. And that is actually where you, if you are currently in a negative net worth position, you want to really put some action plans in place to see how you can go to get to a positive net worth position. So let us go back to what would count as assets. So that is, like I've said, anything that you are owning and that you can potentially receive returns, or it can generate an income for you, would count as an asset. So examples would be, if you are going to do your calculation, your positive bank balance, a savings accounts, emergency funds, any outstanding debtors where, so for example, a family member or somebody is owing money to you. Then also a car can count as an asset. a motor vehicle, some furniture, also things like art or wine collections, those kind of things can count as assets. Jewelry can count as assets. And then obviously investments. Those ones are one of your biggest and most beneficial assets to have. Then also property, that could be the property that you live in, as well as any investment properties that you have. And if you want to know, but what do I include as the value of those assets, that would be either the balance in terms of things like investment or a bank balance or something, or it would be the market value of that asset. So for example, if you take your property where you live in, you would be including the market value of that property. The same with your car, so you wouldn't include the cost price that you paid for it when you bought it, maybe 3 or 4 years ago. You want to include kind of the current market value. If you have to sell whatever that asset is now, how much will you be able to get for that asset in terms of a selling price? And then what would count as liabilities? That would be anything that you owe to somebody else. So that could be owing to a bank or a financing company, or a family member, or whoever that other party would be. And there you would think of things like overdrafts. So if your bank balance is in a positive, then it would be an asset. If it is in a negative balance, then it would be a liability. Or any credit cards, also with a negative balance. If it does have a positive balance, you can reflect it as an asset as well. Any personal loans, store cards, so that would be any like a macro card or a card at the furniture shop or clothing accounts, any of those kind of cards. Then any kind of creditors payable that you are having a contractual agreement where you need to pay creditors. Then also if you have a business, it could be any shareholders or owners loans that you owe to your business. And then also you need to take into account tax payable in your personal capacity. That would also be a liability. If you are in a position where SARS needs to pay you a refund, then that would obviously count as an asset. And then some of the biggest liabilities that most people have would be the bond on your primary residence, but also if you do have investment properties and you have bonds on those investment properties, you would also include those as liabilities. And the same with car financing. If you have any kind of financing agreement to pay for your car, that balance you would also include in your liabilities as part of your net worth calculation. And then if in terms of how much should you include as part of this calculation, you want to typically include the outstanding balance that you are owing. So the full amount. For example, if you owe 400,000 on your car, then and that is the amount including the interest, then you include that amount in your calculation. Now, the problem with liabilities is obviously that it is carrying interest. So you need to take into account the interest payable as well, and that is quite often where things go towards having a negative net growth or net worth value because of the interest portion, and you would already pay quite a lot of the of your loan or whatever, but because the interest is kept on being capitalized, that balance quite often doesn't decrease a lot, and then that is also throwing you into a negative position. So something that you need to be very aware of. So let us just have a look at 2 or so examples so that you can just understand it better. If you think about your house like your primary residence, then that if you have paid it off or you bought it cash, that is obviously first price. That is where you want to be, because then you own that asset, and then that full amount, that market value of your asset will count in your favor as part of your assets. But now if you do have a bond on your house, or even in an investment property situation, then you would include the bond amount, the outstanding balance, in your liability section. And that is quite often then where people think they own or they can count their house as a positive big asset, but when they bring in the bond as well, then that is also taking your net worth position almost into a negative. And the same with things like a car. If you do own your car, you bought it cash or you've paid it off, then obviously you would include the full market value as part of your assets. But when you still have financing on your car, then you need to include that outstanding amount also as part of your liabilities. And this is also, if you think about a car where usually, especially in that first year, the market value of your car is decreasing a lot, while your car financing balance, because of the interest component, is not decreasing as much as the market value would be. And there it already again pulls you into a negative net worth position over the next year or 2 or 3, because your market value of your car keeps on decreasing, but your financing is not decreasing in a similar relationship. So that is very important to think of anything that has this impact on your net worth. So even if you think about furniture or things like that, where the market value decreases more than what, but you are still paying it off. So let us go into unlocking the 4 simple untapped principles that puts you on the road to become financially free from the rat race. So first of all, like we've said, if we've looked now at the calculation where you would say your assets less your liabilities equals your net worth. And I hope this previous section helped you a bit, and you've made notes and you just have a little bit more of a clear idea in terms of where your personal net worth is. Would you be in a positive net worth position where your assets exceed your liabilities, or are you in fact in a negative net worth position where your liabilities are exceeding your assets in total? So if you think about how can we change that position, or if you are already in a positive net worth position, how can you grow or increase that net worth position? You obviously want to increase your assets. So everything that you are owning, you want to have more assets. And then you also want to decrease or reduce your liabilities. And once you are doing that, you are in essence increasing your net worth, or you are either growing it, or you are essentially moving from a negative net worth position into a positive net worth position. So let us go into the four principles that we want to discuss. How can we increase that net worth position over time? First of all, like we've said, you want to create more assets. Now there you want to think about assets that increase in value. So if you think about what we have discussed, things like a car and furniture and all those kind of things, TVs, those kind of things that's actually decreasing in value over time, those are not the assets that you want to have a lot of assets in your portfolio. You want to focus on those type of assets that increase in value over time. Now there we typically think about things like cash, we think about things like investments, we think about things like property, all those kind of things that will increase in value, because now whenever you do your next calculation, maybe in the next year, and then your assets would have increased because your market value would have increased. And you also want to think about assets that generate income, because that is when you can get to a position where you have multiple income sources. So you do not only have to rely on a salary or a business income, but you can start creating more income streams, and those income streams can be passive income streams. And that is ideally where you want to be. I'm having another webinar next week, Thursday. I'm going to discuss this in more detail, so you're welcome to join me for that. But this is typically where you want to get to. You want to have those assets that generate income for you, but you don't need to spend time on earning that income, because that is exactly what will be moving you or getting you from being in that position number one where you are in the rat race to position number two, because you have that constant flow of money and income into your net worth position. And you also want to try and move away from assets that's not associated with a corresponding liability. So what I'm referring there to is, for example, where you have your primary residence, but you do also have a bond on that, because then you have a positive as well as a negative. So ideally, you want to move towards adding more assets to your portfolio that won't have corresponding liabilities, unless that liability can provide you with returns, so also an income stream that can actually be in your favor. So there I'm thinking about things like a property as an investment where you will get a rental income, and then if you do have a bond, so you have an asset, you have a liability, but you also have rental income that you can use to repay your bond, and you are in fact using somebody else's money to repay your bond, but you are building up another asset in your portfolio. So you are in fact growing your net worth position, but somebody else is actually helping you to add that asset or to create that asset or to pay for that asset. So this is something really nice to have in your portfolio to grow your net worth over time. And if you just think of all those examples that we have discussed in terms of what kind of things would count as assets, then you would agree with me that the number one thing that you want to add to your portfolio that basically comply with all of these rules, if I can call it that, would be investments. If you can start building up a bigger investment portfolio, because the majority of investments would increase in value over time. The investments can help you to generate an additional income, and it is a passive income stream. And investments is also not associated with a corresponding liability. So whatever your investment value or your balance would be, that would just be a positive, only an asset. There is not a negative or a liability associated with that. So investments, definitely something that you want to focus on when you want to grow your net worth. Then if we go into the second portion, is all about avoiding having liabilities or debt, or to also, if you do have debt or a bond or car financing, personal loans, credit cards, all those kind of liabilities or debt, you want to focus on repaying those liabilities, because then you, by doing that, you are also increasing your net worth. Now, the biggest thing there with repaying liabilities or avoiding debt is to have a cash is king mindset. Now, this can be something quite difficult, especially in South Africa, where debt is freely available, but you need to start adopting that mindset where you say to yourself, if I cannot afford to pay for this cash, I'm not buying it. I'm saving up until a point where I am in a position to pay for it cash. Because once you are incurring debt to have whatever you want, you are actually working against growing your net worth. And then also you want to, if you have current debt, you want to repay your debt as quickly as possible, because every cent of debt that you are repaying or reducing is obviously having a positive impact on growing your net worth. And what is the golden rule in terms of repaying your liabilities or your debts quicker? It's all about you want to be paying more than your minimum installment. So that's the golden rule, because then your capital balance will reduce quicker and you will over time pay less interest, and you can also reduce or shorten your repayment period. So all of that is in your favor, and especially now with the interest rates being really low, this is the most favorable position for you to use to keep on or to continue paying your higher installment so that you can repay your debts or your liabilities quicker. Then if you think about, we've been talking about assets and liabilities now all the time, but another very important component that's also having a direct impact on your net worth would be your income less your expenses. So this would be your salary, your commission earned, your business income, whatever, less all your expenses, less your basically your bond repayment, your installments on your car financing, your bond, your water and electricity, groceries, all those kind of expenses. And there you typically want to be in an excess position where your income exceeds your expenses, and you don't want to be in a shortfall position where your expenses exceed your income. So this is obviously, if you do end up in a shortfall position, and that happens to you quite frequently or on a regular basis, that is a red flag, and you want to avoid that, and you want to take action to get out of that position. But you essentially want to first of all have a positive excess position where your income exceeds your expenses. And then the secret is all about, you want to use that excess, you want to grow that gap over time. So basically the gap between your income and your expenses, you want to grow that, because when you are growing that gap, you are ultimately building wealth. So that is also another way that you can use, which is quite easy to use, because you want to use that excess that you have left over at the end of the month, and you want to start investing that excess, because then you are also ultimately growing your net worth. So this gap between your income and your expenses is something really important, and something that you need to know, and you need to manage, and you need to think about ways over time that you can grow that gap. And I also talk about this a little more in next week's webinar, but just to give you an idea, you want to ultimately increase your income, and that is, again, like I've said, multiple income sources, and you want to reduce your expenses. That is how you will ultimately be able to grow that gap or increase that excess position. And this is all where it comes in terms of effective budgeting. And that is something very important, where a lot of people also go wrong by thinking they have a budget when they only have a list of expenses, and they are in fact only looking at their expenses. But when you are actually having an effective budget, and you know how to use your budget as a powerful tool, you can actually start using that as a wealth creation tool. And then you can use your budget to actually help you to, first of all, know whether you are in an excess or a shortfall position, but it also can help you to understand and to grow this excess position and this gap over time. So an effective budget, absolutely crucial to have. And then the last principle is all about taking action. You understand now how important it is to grow your net worth, you understand what it means, you know what the calculation is, you are able to calculate your net worth, and you know what to do to grow that net worth. But it's all about you taking ownership of your financial future. Like I always say, just keep in mind that no husband or wife or child or financial advisor or accountant or tax consultant or whoever will ever be in a better position to ultimately take responsibility and ownership for your financial wealth. You need to take action and take responsibility and ownership for that. And that is similar to, you know, when you want to, maybe now after lockdown, you've been eating a lot and you haven't really been very active and you want to lose weight. Just by saying, I want to lose weight, that is not going to happen. You actually need to start exercising. You need to start eating a healthy and balanced diet. Then only you will get to a position where you are losing weight. And it's pretty much the same with finances. You need to take ownership to in terms of how you're going to improve your financial fitness and how you're going to create more wealth and grow your net worth over time. So what is key? What are the key things that we have discussed this evening that's so important in growing your net worth position? First of all, to avoid debt and to create more income sources, especially passive income sources through something like investments, where you don't need to constantly work, you don't need to constantly be part of the rat race to earn income. And then also you want to stop spending. Like if you think back about those things that we have discussed in terms of having the fancy car and the branded clothing and any kind of unnecessary spending, you want to stop doing that. And if you can afford it, by all means, if you already are in a very good net worth position, then by all means you can treat yourself. But if you are not there yet, think about your financial future and rather give up certain things now for a couple of years, work on your financial situation to improve your financial situation so that you are no longer in the rat race, and then you can obviously live the life of your dreams and you can afford to spend on all the things that your heart desires, because you can afford it and you have a good positive net worth position to back that up. And then, like we've said, the most important thing is to start investing. You want to start building your and growing your net worth position, and when you are start investing, then that also comes with creating more income for yourself. So this is what you ideally want to focus on when you think about how can you improve your current financial position and how can you move from position number 1, being in the rat race, to position number 2, living that lifestyle that you dream about. So it's all about taking action. There is no get rich quick scheme. There is no kind of you are thinking about abundance and you're thinking about all these nice things, and tomorrow morning you are waking up and you have an additional 1 million rand in your bank account. You need to, like with everything else in life, you need to take action and you need to work towards improving and increasing and growing your net worth over time. It's not going to happen overnight, but you need to be conscious about it and consistently working towards creating a better net worth position for yourself. So you've been listening to me for quite a while now, so I would like to hear from you who is keen to learn how to free yourself from the rat race by increasing your wealth. You can just give me there in the chat box if any one of you is keen to learn a bit more about this. So we've got here, me please, got some yeses coming through. Yes, yes, yes. Okay, awesome. So let me share with you what do we have available this evening that can definitely help you to get out of this rat race and increase your net worth over time. And so this is what you will get. There's an effective budgeting online course. So this is basically 1 hour of video tutorials. So you can do it in the comfort of your own home when you are not having load shedding or something. You don't need to go anywhere. You can do it in your own time. And this course is all about helping you to not only have a budget, but to have an effective budget. And there is a huge difference between what you quite often perceive to be a budget, or what you think a budget is about, and having an effective budget. So it helps you in a practical way how to set up an effective budget in your personal financial situation. It will help you to change your perception about a budget, because most people think of a budget being a restricting tool, or I cannot live the lifestyle that I want to live because of a budget. But if you are going to do it in an effective way, you will see a budget is actually a wealth creation tool, and it's not something that restricts you. You will most likely, 99% of the people doing the courses, as they go through it, they do find some savings in their personal financial situation just by looking at things differently. You will receiving a workbook to help you to practically apply all of the lessons in your personal financial situation. You will be receiving a budgeting template. So this is an easy template in Excel that is customized, or that you can use to customize for your personal situation. And you will also be receiving a certificate of completion at the end of the course. So this course is all about implementing an effective budgeting tool in your personal financial situation. And then we also have the second one, would be a Master Investment 101 online course. So again, a 1 hour video tutorials. It's short clips, so it's not overwhelming. It's about 3 minutes to 12 minutes each. So you can literally every day when you have time before going to bed, go through 1 or 2 videos. It's not complicated. It's really about helping you to understand investment terminology and to make it easy, being explained in an easy way that is simple to understand. You are discussing the key considerations. That's very important, that you need to know before you are making any decisions to start investing or to build your current investment portfolio? What are the things that you need to look out for? If you have a financial advisor, what are the questions that you need to ask him or her? Then we are talking about a couple of the crucial standard key type of investment types. That would be cash, tax-free savings, shares, unit trusts, and properties. So we discussed those ones in a bit more detail in terms of the pros and the cons. What are the things that you need to know? How does it work? All the detail or the basic things that you need to know about these investment types. And then also how to become a good investor. What are those things that the smart investors know and apply when they are investing? You will also be receiving a workbook as well as a certificate of completion. And this course is all about helping you to obtain the knowledge so that you are able to make powerful investment decisions. And then something else I also want to add to this offer would be a ebook, my book Financially Fit and Wealthy. I've received the African Authors Award in the financial literacy category for this book in 2019. And this book has really been doing extremely well during this lockdown period, really helping people to get their finances back on track. And you will see I'm also discussing a lot about the things that we will discuss this evening into a lot more detail, but to also help you to see the bigger picture and where everything fits in, from budgeting, investments, debt management, how to repay your debt quicker, to retirement, insurance, all those different aspects of finances. So it's a very comprehensive book that you will definitely enjoy reading. It's not complicated, and it's short pieces, so it's definitely not difficult to read. And if you have to think about the value of these courses and the book, what will you be paying out there? The effective budgeting's value would be 1,650. The master investments one, 1,950, and the ebook 200 Rand. So that brings you to a total value of 3,800 Rand. But you are definitely not going to pay 3,800 Rand. If you are going to my website, you will see that I'm charging 1,897 Rand for these two courses and the ebook. But because you are on this webinar, you will also not be paying 1,897 Rand. Because you are on this webinar, you will only get this for 997 Rand. So only 997 Rand. So that is basically paying for the investments course, and you are receiving the effective budgeting course as well as the ebook absolutely free. So what is important is that I'm going to share with you a link, and then you need to go to, I will put it in the chat box as well, because you need to use this link to make use of this offer. I have shared it in the chat box. Because if you're only going to my website, you will see the full price, the 1,897 Rand. It's only on that link that you will receive this offer at this price. because I'm not making it available to the public. It's only for people attending the webinar. And then also the first 3 people who are paying will also be receiving a 30-minute one-on-one consulting session with me, absolutely free. It's worth 950 Rand, but that is a good session where, especially after you have done the courses, to reflect and to really discuss your personal financial situation, any additional questions that you might have, and help you to really get into a position where you can grow your net worth position. Then it's also, this offer is only valid until Monday, the 7th of September at 7 o'clock in the evening. So only valid until Monday, the 7th of September. And I do offer a 14-day money back guarantee. So if you are during the course not receiving value, or you feel it doesn't help you or whatever, you are more than welcome to let me know. But I do know that people are receiving a lot of value. I will also be sharing some testimonials with you now, and I know there's also people on this webinar who have done some of these courses before. Again, this is the link, financiallyfitlifeacademy.com/WOS. So you need to use that link. Then you can take up this offer. And to just share with you a few of the testimonials, I've just summarized it here, but you can, on the offer page, you can read their full testimonials. These are 3 people who have done it recently. Paul said, for the first time, I had a proper budget in place when my tax specialist asked for it. So that is awesome. Then Jooste said, it's amazingly insightful. And Diane said, I wish I had done this earlier. So this is, I think, most people's reaction towards the courses. They would say they wish they've actually done it when they were still in their 20s. So these are just some of the testimonials I would like to share with you. And that brings me to the end of this presentation. So thanks a lot for joining us this evening. I hope you have learned a lot. I hope it has added some value, and that you can now go back, go calculate your net worth, and that you know now what you need to focus on to grow your net worth over time. So please, if you feel like it, take up the offer. I promise you, you will receive good value from it. And then also, if you have any questions, you're more than welcome to pop it in the chat box. But from my side, thanks a lot for attending, and I hope to see you next week, Thursday, again for my next webinar, but then it's back to Charlotte.
Thank you very much, Ronel. And ladies and gents, and I'm so glad to see we've got gents online again tonight. Ronel, you're speaking to a cross the board audience here tonight. Ronel, I want to just say thank you so much. You know that what I really appreciate about you, and I'm sure everybody can agree or will agree, is how you simplify it. You know, because it's sometimes for somebody that is not a financial expert, anything to do with finances can be like a block. And I just love the way that you simplify, you explain so clearly, you make it so easy to understand and to listen to. and it's just, you put it into practical terms, which I think is very, very important. I do know, and I can see that quite a number of people have said that they definitely are booking. The one lady says she's already paid. And I just think that anybody that does not take up this offer is definitely going to lose out. I see that it's only available for 3 days. So I suggest that anybody that is still just thinking about it, don't think any further. The value that you bring as a person that is really understanding the true essence of financial management. And, you know, you've given it to us in such practical terms. So I just want to say thank you again for everybody that was online and for those that registered, because I know we've had load shedding. So many people may not have been able to be online with us. I have already mentioned that this has been recorded. We will be sharing the recording just so that you know that you can listen back on it if you were late perhaps. And I know 1 or 2 ladies says due to load shedding, they were a bit late. So I just also wanted to say that the Women of Stature webinar series runs on a Thursday evening as well, and Ronel was my guest tonight. So I really appreciate the fact that she has again availed herself for the Women of Stature webinar series. We, in fact, next Thursday night, sorry, Ronel, it's clashing with yours, but I just needed to mention it as well. In fact, we have her online with us tonight already is Dr. Ilona Wilkin. Dr. Ilona Wilkin is an exceptionally astute woman. And she, I don't know if she's still available to maybe just give herself a quick introduction, but if not, it's all about the emotional well-being as well, because we've gone through lockdown, we're still going through a certain phase of lockdown. People are feeling very angry, they're feeling stressed, they're feeling anxiety. And I think the one thing, and as Ronel does, she talks about being financially fit. Ladies and gentlemen, it's as important to be emotionally fit. Oh, I see that she is online, but she can't go on video. Now that's fine, Ilona. But I also want to encourage you to consider your emotional well-being in this situation that we are in. A lot of people are suffering from anxiety. Depression is now more than ever before. And I think we need to take a time to just sit back and to listen to our bodies and really recognize the signs of stress, anxiety, and possible depression. So that's next Thursday night at 7 o'clock again. If anybody is interested, we will be sending out the information of that as well. So thank you very much for attending tonight. Is there any questions anybody would still like to ask? You're very welcome to ask a question now. We are almost at the end of our time, but we still have a few minutes to go. Is there anybody that wanted to ask a question? Please unmute yourself. Come online with us. We'll give you a bit of time to do that. Okay. It's here. Okay.
Hi, Ronel, Mike. Thanks for your presentation. Very good and very exciting. I've got a question for you. If you, and I've been advised, advise me. If you have an access bond and you can pay that access bond off in your house tomorrow, would it be correct in doing that or keeping it for whatever you want to use it for?
Remember, with an access bond, you will always, the money that you've paid basically in excess of your interest and normal installments, that money will always be available to you. So the fact that your bond is usually one of your debt instruments with the lowest interest rates, to use that access bond or the positive amount that is available in there would always be the best debt option, simply because you are paying less interest, and it's also over a longer period, so your installments will also be less. So in terms of if you have to pay for something, then yes, definitely you can use that. That is also a very good financing option, especially during this time. So if you have any excess money elsewhere and you want to put it in your access bond, that is also a good option, because you are reducing your capital balance on your bond, and you will ultimately pay less interest, but because you are always paying more interest than what you are receiving, that is also a good, almost a savings option or investment option, to rather put the money in your bond. So I don't know if I exactly answer your question, but yeah, if there's an additional question or there's something else that I maybe didn't respond to clearly, you can maybe just let me know.
Yeah, thanks. No, I'm just trying to figure out whether it's worthwhile paying the excess bond off. So like earlier you said, you know, if you got the house and you pay your bond and your house is bond free and whatever, I fully agree with that and understand that. My question is, if you have the excess bond and you can pay it off tomorrow, would you do that, or would you still keep the excess bond?
No, what I would do is, because it is already approved financing, so what I would do is, as a good option, is I would pay it off, but not pay it off completely. So keep like a very small balance in there, so that you still have access to that money at any time. So you still have the facility available, but you are no longer paying big installments on it. I don't know if that makes sense.
Yeah, all good. Thank you.
Okay.
Is there anybody else that would like to ask a question? We still have a few minutes left.
I'd like to ask something.
Go ahead.
Hi, Ronel. If somebody is under debt review because of past financial issues that they had, is it still possible to get into that position, or is it going to be almost, is it going to be a very tough one to get out of?
In terms of getting into a positive net worth position.
Yes.
Yes, that is always possible. And if you are in a debt or under debt review, remember that is also just for a certain period. So it's usually about 5 years that you are under debt review, and then you, if you have managed to repay all your debts and you come out of that, then obviously you can start building towards having a positive net worth position. So that is absolutely possible. And the one way of doing it already is if you do have, if you can create additional income sources, whether it is through you have a bit of excess money that you can start investing and you can start earning an investment return on it, or if you have, maybe in whatever other way you can earn additional income, you can already work on that portion that I've explained in terms of how you grow your gap between your income and your expenses. So if by doing that, you can also, if you have more money available to repay debt, you can also get a position where you get out of debt review quicker, because you have more money available to repay it. So that is definitely, that's absolutely possible, it's maybe just a bit tougher because of certain restrictions and those kind of things, and because of the current situation. But what I always say to people, there's not much what you can do about your past or your current situation, but you can definitely work towards improving your future. So it's all about just sometimes a change in mindset. Like I said, that cash is king type of mindset being more disciplined with your spending, and start being creative, thinking about how you can create additional income sources and start at least investing so that you can start growing your asset base as well.
Thank you.
Anybody else need to ask a question or have something on their heart? Okay. Well, Ronel, it seems as though we've come to the end of your webinar with us tonight. I just want to say thank you again to everybody that has participated. I think by now, Ronel, you've become almost like a standard feature in our monthly webinars, and we certainly look forward to the next one, because every time that you do present one on the Women of Stature webinar series, it's always something different. It's always very, very educating, and I think many people should consider attending webinars where there is financial resources like yourself. So if everybody is ready to say goodbye, then we'll do so, and we want to say thank you again for attending tonight, and enjoy the rest of your evening. Bye-bye.
Bye-bye, thank you.